Okay, hello traders and welcome to our final part in our 7-part video series on strategy construction. Today is part 7 out of 7, and what are we going to be looking at? We're going to be looking at the TS components, where we're going to bring it all together and give you the overall picture on strategy construction and to build a sustainable, scalable, reproducible strategy. This and more in this trading video. Hi traders, thank you for joining the MasterTheMarkets team and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Stu Naupan here, founder of MasterTheMarkets Elite Trades Conference and the Traders Open Day. So here we are, traders, on step 7 of the strategy construction. Now, some of you have been asking, okay, where do I find all the previous parts of this video series, Tiru? You can easily go on to, I'll quickly say this and I'll quickly dive on to the topic for today. You can quickly follow us on Master the Markets 2010. We'll be going on since 2010, that's why 2010. And you can find all these videos under the streams section, and where you can see 7 steps for strategy construction, the RM component, part 6 out of 7, 5, 4, and everything else. Okay. And you can also see under the ideas section all the live trades, ideas, and everything that we're taking in real time as well. Okay. I'll go on to the charts in a minute after I've covered some of the material, and then we'll put all this information in real time. Okay, a couple of things I also do need to tell you. I think I'll talk about that later as well. One is on the 5-day video course that we have. You can take a look at that later as well. I'll point you in the right direction. Actually, the link is over here, but anyway, we'll come to that in a minute. Now, swiftly moving on to the TS components on step 7 today. Now, taking a look at the first one. So in terms of the TS components, traders, the first thing that we are looking at so far, we've covered the S component, right? The S component. Now, what was that? That was the strategy component, the strategy, right? That was all what this was about, the strategy construction. Now, as you know, as we covered through strategy construction, it has got 5 components to it, is it not, traders? Yeah? And the 5 components is, if I were to bring this up over here on the script sheet template, which I showed you guys as well, first was the concept objective component, right? Concept and the objective of the strategy. The second component was as some of you already guessed it right and typing it in already and messaging us and emailing us, is the entry rules. Okay, and that is the entry rules that we were talking about, the entry component. And then the other one was what was the other one? Yes, some of you are getting it right. Is the stop loss component, right? And then the fourth component, or the strategy component, was the target component, and finally the last one being the risk management component. Now, we covered all of these, traders, in all our previous parts and went into much more in detail as well. So highly recommend you guys to go and watch the previous parts to this. If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone. Right, so now today we put it all together and we're talking about, if I were to come back to here again, what are we really looking at? We are looking at the strategy component which you have looked at, but we're saying is only 1/3 out of the entire trading system components. The TS refers to the trading system components. The strategy component only comprises of only 1/3 of the whole entire trading system. Now, what does that mean, Tiru? Is there more? I mean, the strategy itself looks like there's so many components that we need to cover, we need to think about, and all of that. So are you saying that there's so much more then as well? Yes, there is, traders. And you see over here, if you take a look, what are the other two is the natural question that you will definitely ask yourself. But if before I come to that, the two more components, before you go live on your strategy and put real money to it, there are 6 steps first for publishing a strategy. There are 6 steps first for publishing a strategy. What are they? So if I want to go back into the live charts very quickly over here, let me just take a look over here. So if I were to go back into the charts, so before we start to take any kind of trade, just now I was just taking a look at Bitcoin as well. We're doing a live trade on this in real time as well. But before I publish any strategy where I'm taking live trades and all of that on this Bitcoin, for example, whether this weekly bottom will hold and all of that, and using other indicators in combination as well to make my decision and consideration on entering and how to manage that trade, I must have gone through the 6 steps for publishing a strategy. And what are those 6 steps? Now, let's go through that very quickly. Now, the 6 steps are, traders. The first step is having your script sheet. Now, this is where we went through all the 5 components, right? Which is what I spoke about just now, right? Concept, objective, entry, stop loss, target, and then risk management. The next thing is, after you've written all of that, you must go and test it, right? In back testing format. But the important thing about back testing is you shouldn't look at the data before you test it. So all these rules must have been written out first, okay? If you want to modify it, let's say after maybe 20 trades of testing, then go and modify it, but don't look at the next 80 traits you're going to test. That's how you do it, all right? So that you don't go and curve fit it. Now, after that, traders, then you go to see if it's needed to optimize it or not. After you backtest it, if you're not getting your favorable results, then you go and optimize it, which I said. How you optimize the script sheet is that you don't look at the next 80 traits or 20 traits that you're going to test it on, okay? So that's how you do it. Don't look at all the traits and then go and optimize it, yeah? So that this will help you towards building sustainable, scalable, reproducible strategies. Because you see, a lot of people who have backtested for many years, right? They'll run a lot of high, complicated algorithm kind of testing for 20 years. But the problem is, suddenly when they trade it for the next year onwards, it doesn't work. It doesn't work according to even their drawdown perspective, which I told you on the previous video. What are the types of drawdowns you need to take a look at? The three types of drawdown. So all that doesn't start to work. So the optimization has got to be done very carefully without looking at future data or past data that you're testing. After these 3 steps, script sheet, backtesting, optimization, then you go and do it on a forward testing manner. If you want to be a bit conservative, do it on a simulative, do it on a demo account first of forward testing, okay, to see if it works. And that's how some funded trader programs are as well. They make you do it on a simulated account to see if you can prove to them, okay, whether you're able to consistently execute. Now, once you've survived through the simulated account, at least about 3 to 6 months, and then what I would then suggest is go and trade it on a small live account, okay? Small account is anything up to $100,000. So it can be anything from 2,000, 5,000, 10,000, whatever it is, up to 100,000. And after you have gone through that and putting through about 6 months to 1 year of live trading on it, then you go on to scaling out even more higher, anything from $1 million upwards on a big account. That's what I would suggest. Some of you might say you're happy just over here at this point, just stick with that up to 100,000, 200,000, whatever. You don't want to get more institutional money. That's totally fine. Just do that. Even if this is your own money that you have capital, that's fine. Take that on as well and just trade with your own personal money. You don't need to take on and scale with other people's money as well. That's totally fine. So this will be the 6 steps to publishing the strategy before you go live and you start to trade on live accounts like what we are doing over here and showing you in real time what it would look like taking the trades in real time. Okay, that's what I would say. That's what gives us the conviction as well. We've gone through all this process and steps. Right. Now, after you have done, which is still, remember, this is the first out of the 3 components of the trading system. Okay, the strategy component, which already entails 7 steps. After that, then you may ask, okay, Tiru, what are the other two components. Okay, you only talked about, so you're saying now strategy is the first out of the three components of the trading system. What are the other two components? Yeah, the other two components, traders, as you can see, the strategy component is the one out of the three. The other two components, some of you are already messaging it in, already are typing it in. The second part of it is the psychology component. The psychology component of the trading system, and then the final one is what we call the optimization component. Okay, and then it goes on a feedback loop, and then this is what is used towards achieving consistent performance, okay, or consistent results. Okay, this I would say is the other two components of the trading system. All right, now, traders, swiftly moving on and taking a look at this. Now, the psychology component, what is that necessary for? It is the glue that actually binds the strategy and the optimization component, or the results finally that you are achieving. But the psychology component is necessary towards only one objective, which is the CE part of it, right? Which is the what we call the consistent execution. Consistent execution. Psychology component is necessary for consistent execution. Now, if you do not consistently execute your trades, now if I go back to here, if all these are not based on a structured framework which allows for consistent execution to occur, that means to say that if your strategy rules, you see, for example, even on gold, as we are taking a look over here, if your strategy rules that you built it on, your strategy component, right, which involves 7 steps towards strategy construction, your strategy rules based on the 5 components which I talked about, does not or is not based on quantified rules, then how can you consistently execute it? Or even if it's based on some principles which are a bit subjective, how can you consistently execute it, right? You don't have a structured framework. So that is why, and consistent execution, some of you might say, okay, give me the rules, I will execute it, no problem. No, what you're underestimating also is the stabilization of your emotions. Why must that strategy continue to work? Why must that strategy continue to work? Your intellectual conviction must be there on the rules that you have set out. And that's what Ray Dalio always keeps asking. And Ray Dalio, if you have not known him, he's the biggest hedge fund billionaire trader, right? He's got 160 billion under asset management. He's got one of the biggest hedge funds in the world, if not the biggest, 160 billion. And he keeps saying you must keep asking, why must your strategy continue to work, right? And towards that, traders, even if we give you the rules for the best strategy in the world, your psychology must be ready to trade it. And the psychology, what I mean is, psychology is an integration between your intellect and your emotions. Your intellect might be totally agreeable, why must the strategy continue to work, and you know exactly why you have put the rules together, but because of our past bad habits or past memories of the losing trades, that might affect you pulling the trigger to take the next trade, which might be the biggest winner. Okay, so you must constantly do the reminders. So to make the emotion stable, I mean, there's a lot of ways to do that. Just give you an overview is reminders. And how can the reminders come true? It's either through through the eyes, through either watching something, or reading books, reminders, or listening to podcasts or affirmations where you keep reminding yourself, through listening as well, all of those things, and through meditation as well, all these things, a lot of techniques that you can do, ingrain into your psyche to feel it, that not only is it intellectually sound, but I really feel and I believe in my strategy that it will continue to work in the law of numbers through the consistent execution of my trades. So that is the second component. So it's a lot of work. A lot of people actually underestimate the amount of work that is actually required, traders. Okay, for those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below. So now going back, so now you understand the importance of the consistent execution. That is the glue, right? That is the glue between the strategy and between the, so psychology sits in between the last part, which is what I'm going to speak about, which is what I told you about, which is the optimization component. Okay, now the optimization component is where you look at your stats. You look at your stats review, right? Your stats review, where you start to look at, is my strategy still continuing to work as it is meant to be? And this is where we usually will show you, and in terms of what we have achieved as well, let me just see if I can pull this up very quickly for you guys, of 2022 results and 2023 results as well on the Excel spreadsheet. So on 2022, before I go on 2023, you can see, right? I mean, we had three strategies, and each of these strategies, right, rather than some of you may be thinking, which I don't mind, that we punch all these numbers in. No, each strategy is, every trade is locked in real time, right? Every win, every loss, every single thing. Our trading team does that, which has been inspired by our own clients as well. And the lift-off strategy, the three strategies, every single trade that we've taken, every single win, losses, everything is recorded down. So in 2022, it was an easy ride in the park. This is what I'm talking about, the optimization component, yeah? So we keep monitoring every single thing as it hit our maximum drawdown. This was on the previous videos on, I believe it's number 5, part 5 out of 7, where we talk about the stop losses and the drawdowns and everything that we got to take a look at, and risk management as well. So over here, what we look at, traders, is not the, all the profits that we're accumulating. Okay, yeah, we can beat ourselves about it, and we're doing a good job in 2022. But remember that what we are really looking for is the drawdown, right? As it hit our maximum peak to valley drawdown and all of that, trade by trade drawdown, loss clusters and all of that. This year was easy because every month was profitable, and we ended up with 73.34% profit at 1% risk. Remember, this is all end of day strategies. I'm not talking about any other strategies yet. And just on a number of instruments, about 9 to 10, you can always expand it to make even more if you want to, if you're looking into that. But for institutional, I mean, to manage institutional money, I mean, 73.34% is really, really good amount of profit, performance. However, this year, traders, as professionals, we never look at the profitability. We always look at the drawdowns. However, this year, as that year came to an end, we always keep thinking, okay, how will the profits rearrange itself? How will the losses rearrange itself for the next year? How will the drawdowns look like? What should I be prepared for? This year, look at this, right? For 5 months, we were in drawdown. 5 months, we were in drawdown. Cumulative, about 11.55%. Now, if you do not know your drawdowns, when it comes to your optimization component, you might start to think, okay, I should stop already now and go and keep optimizing it. No, you shouldn't. The most important thing in the last component of your trading system component is to know when to stop or when to continue. All right? Very important. But if you do not know your peak to valley drawdowns and all of those 3 types of drawdowns which we spoke about, I think in part 4, part 5, you wouldn't know when to stop or when to continue. So when you come back to this, If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.